Okay, just real quickly, I'll go over kind of the next worksheet that I want you guys to work on. Also, importantly, I want you guys submitting these things as you get them done. You'll see that there's some separate drop boxes, right? So I've got these financials broken down. There's the startup and then the next ones. Don't tear your workbook apart, right? Submit the whole thing, that's fine. If you've done work on some of the other stuff, that's fine, but I'll probably just review what I've asked you to do to that point. That way I can try to kind of make sure everybody's staying on track and getting the right numbers where they need to go, et cetera, okay? So please be submitting those as we go along. The whole packet, what do I say, financials are going to be due here first part of February? 2nd or something like that. So yeah, that's not that far away, okay? Yeah, basically a week. So get them in there so maybe by Thursday for sure I can have a chance to kind of come around and gauge where you're at, give you some input, as to things that need to be changed and whatnot. Again, they're not locked in stone. When you do your marketing plan and you find out that you need to spend more money on marketing, it's going to be okay and it's going to be relatively easy to come back and make those changes. Okay, that's fine, right? We can come back and do that. But we should have a pretty good idea where we're at this point in time. And those things should be finished so that we can check, make sure everything's balanced and everything's working correctly. So, okay, let's take a look at the next part. I think we went over your forecast, sales forecast, right? Next thing I want to take a look at is your payroll. Okay, and again, you'll see up here that there's really not that much in the orange that you're going to be filling in. There is some in the yellow that you can change, and we may do that. We'll see. Okay, up here. Okay, owners. Are you going to pay yourself a wage? Tyler, you're shaking your head. Probably not.
No, not in the first year. Not if we want to make money.
Okay. Let me answer and be a little more succinct. You will never pay yourself a wage, okay, unless you form a C corporation. Is there any group in here or any company or any business in here that said they wanted to form a C corporation? Okay. I would tell you more than likely you're crazy if you want to form a C corporation, okay? There's one entity that's double taxed in the United States of America. What would that be? C corporations. Okay? They're double taxed. Every other entity, the tax burden or tax benefit, whichever the case may be, flows through to the owner as we speak. As we speak, that's the case. I say that because kind of listening to some of the proposals being thrown around with the new administration and everything, there may be some changes coming down the road. I have no idea at this point in time. No idea. Some of the conversations that they've had have confused me, and I sometimes think I know a little bit about it, but they get off on some tangents that are a little bit strange. But as we speak, okay, a C corporation is the only entity that's double taxed. Okay, the only entity where you would actually kind of pay yourself a wage, probably. Most of the C corporations are the big ones that we see. Okay, they're C corporations because they go public to raise money. It's Walmart and Apple and Google and all those are C corporations in our area. Okay, there are a lot of C corporations in Montana, rural Montana. The reason for that is there's some special benefits that farms and ranches can get. Okay, special benefits that farms and ranches can get for C corporations. Typically those are, I can't really think of an instance where those same benefits would apply to a small business versus that small business becoming an S corporation or an LLC or some other such entity. Okay, so that said, why don't you pay yourself? Well, the reason is because you're going to pay taxes on whatever the business makes regardless. Okay. And so you'll see when we get to the cash flow that instead there is a place where you will have an owner's withdrawal. Okay, they might call it something different. Owner's distribution, maybe. Let me get to that cash flow and we'll see. Yeah, owner's distributions is what they call it. Okay. So you may make $50,000, but you might take out, because you want to have some money, only $3,000 a month or $36,000. Okay, the other $15,000 stays in there. You're still paying taxes on $50,000, so you know personally. Okay, it doesn't come out of the business. That actually comes out of you personally. That's your personal tax burden. Okay, the way that works when you file your taxes, so you know, is you'd file a Schedule C, which would be the income and expenses for the business. It has a bottom line. That's the $50,000, right, that you show you made. Okay, that goes into your personal tax return. Then your 1040 as business income, boom, and you pay taxes on that personally then. Okay, everybody kind of understand a little bit how that works. Again, C corporations are a little bit different, but all other entities kind of work that way. Okay, so we're not going to pay ourselves anything. Oops, I'm on the wrong thing. Okay, but will we have employees? That's up to you guys. I don't know if you're going to have employees or not. Maybe some of you will, and maybe some of you will not. If you have no employees, this was pretty easy. Okay. Corey's nodding his head. Yeah. If you have no employees, you know, you're just going to be doing this yourself. You may be a partnership, and you're just doing it yourself, and that's fine, the two of you.
I was going to ask him that. Estimated hours per week per person. Do you still want to split what we're thinking we're going to work a week?
No, because that'll goof things up on this particular statement.
Okay. So
Okay. Yeah. Yeah. Okay, so otherwise then you need to be thinking kind of roughly what your schedule is going to be. Again, this could come back and change. You may get to the management and organization plan and realize that you need more hours worked or something like that. You can kind of come back and change that. But if you put in what you're going to pay these folks, you know, and roughly the hours, it'd be a pretty simple matter of coming back and changing the hours. Okay, that's not going to be a big deal if that happens. Okay. So be thinking about that. Be thinking about the schedule that you're going to run, if you're going to have some full-time employees, some part-time employees, whatever the case may be. Okay, independent contractors, maybe. Okay, and I don't know that we've used these. You guys might have some. You know, you could contract out. You know, for your brewery, maybe you have somebody, a swamper, come in once a day or something, but they might be a contract person. Everybody understand the difference between a contract person and an employee? A contract person, if I enter stuff in here, it says independent contractor, it shouldn't show any benefits down here. Right, because as an independent contractor, you're just going to pay them a lump sum. They have to take care of the benefits. They are a business in and of themselves. They're providing a service, right?
Now, they pay their own taxes, right?
Right.
You just pay money.
Right.
Right. Okay.
Yep. Yep. You technically don't have an obligation to ensure that they're making minimum wage or anything like that. They've contracted with you for a specific amount of money to do a specific job. Okay. You're technically your obligation kind of ends there. I'm not going to tell you that the government always leaves it at that, but you know, technically they do. They've been fighting with some entities, but okay. We come down here, Social Security. It says wage-based limit. I think that this is still right. I might have to look that up and just check and see. What that means is that when you are paying somebody, okay, we all pay Social Security taxes up to a wage of this amount. Okay, if you make more money than that, I've never had to worry about this, but if you make more money than that, okay, then your Social Security payments stop, as do the payments that your employer makes on your behalf. Okay, so there is a limit to the amount that you pay into Social Security, an upper limit actually, and this is at the wage limit where that stops. Okay, and the amount, 6.2, right, that's for Social Security. The 1.45 then is for Medicare, actually. Okay, and this is what the employer pays on behalf of the employee. Okay, the employee has to pay an equal amount too, or you withhold that amount. I got federal unemployment, state unemployment. I think these are some rough numbers, but they're probably correct. Employee pension program. So you can have a 401k. Usually a 401k would say, well, you know, I'm going to match 3% of your wage up to, or half of everything you put in up to 3%. So if they put in 6, you'd put in 3. Well, then you'd put the 3% in here, right? Okay, for those employee wages. Sometimes it could be a fixed amount. I haven't messed around with this if it's a fixed amount, because there's pension plans that are called like SEPs, simplified employee pensions, and there's some other names, some other acronyms and whatnot, where it's a straight amount. I think like a SEP, you can put up to $3,000 into that employee's IRA, basically, is what you're doing. And so you might have something like that. Health insurance, if you're going to provide it. Okay, if you're going to provide health insurance, we need to look that up. If you're over 50 employees, I don't think anybody in here is, then you're obligated, if I'm not mistaken, to provide health insurance for your employees. Okay. Other employee, at least as we speak today, you're obligated. That could change tomorrow. I'm not sure. We're in a little bit of an unknown situation here with the new administration and everything. So by the end of the year, those things could change. Okay. That should be kind of it for the payroll. Okay. It shouldn't take you a long time to fill this one out, and holler at me if you got some questions. I do want to move on. Years 2 and 3, it plugs in some pretty aggressive increases, I believe these are. You may or may not agree with those types of increases, and so these are ones that you can come and change, potentially. Okay? So just be aware of that, and if these increases in those payments to your employees seem a little aggressive, or maybe you want to pay them more, that's fine. Okay, you may want to adjust these, and that's fine. The other one then we'll do this particular day is, let's take a look at this additional inputs. What this is saying is that if you're on if you've got a business where you're allowing people to charge, okay, Corey's maybe like that, right? Somebody may bring their pickup in, and you may, maybe the school system, and so you give them 30 days to pay you, okay? So you'd put that in, okay? And how much would you anticipate collecting in the first 30 days? It might be more like 70%, okay? 20% in the next 30 days, and you might have 10% then that you're going to collect after 60 days, right? Okay, so you got to kind of mess with these a little bit. If you are you're selling beer out of the tap room, and that's the only place, it's cash, okay, you're getting paid 100% within that 30 days, right? So you definitely need to come and change this to 100%, right? So depending on the type of business that you're doing, okay, if you accept credit cards, you're getting paid right away. Okay, that's just about the fastest means of payment, actually. It's faster than cash, believe it or not, because cash you got to take down and put into your bank. Credit card gets paid right away. Okay, you do take a little discount on credit card payments. Okay, so put those in there. Your accounts payable. Okay, now this is showing, it's kind of defaulted in here, saying that you're going to pay everything within 30 to 60 days. If you're a little more prompt, you may want to put some of that in there. You may want to speed some of that up. Okay, I would tend to think you would pay a lot of those within the first 30 days. So maybe it's 50-50, whatever the case may be. Line of credit assumptions. The interest rate, that may be a little high actually in today's environment. You may not end up with a line of credit, but when we look at your cash flow, that's going to tell us. Okay, so this may not matter until we take a look at your cash flow and see. Additional fixed asset purchases. This would be if you were buying some equipment, you were planning to buy it in month 6, right? We did your startup. Okay, and startup's the stuff you're going to buy before you get going, but maybe there's a piece of equipment that you don't need right away, and you're going to buy it in month 6. That's where we'd put this. Okay, so we'd fill in some of these additional capital purchases. We'd call those fixed assets, capital purchases. Okay. Now, again, income tax assumptions. Okay, any of your guys' businesses a C, subchapter C corporation? No, surprise, surprise. Okay, so then if that's the case, then all of you answer this. What is your effective tax rate for the business? For your business, what's your effective tax rate? 0. I heard. 0's correct. Okay, so you all need to do this now. I hope you guys all have this opened up. Go in there and for year 1, year 2, and year 3, change that effective income tax rate to 0. And you guys have all chosen pass-through entities, wisely chosen pass-through entities, they're called. Okay, And so your business will pay no taxes. You'll be responsible for those personally. I don't care what you're paying for personal taxes. I care what the business is going to do. Okay? I'm sorry if you have to pay personal taxes. Okay? Amortization of startup costs. We can amortize costs kind of like we do depreciation, and that's basically what this is doing. It's taking some of those costs that aren't depreciated. I don't think for any of us we would want to amortize those costs out over 3 years. And I'll give you an example. Your prepaid insurance is going to get amortized, should get amortized over 1 year. Because you're going to have another insurance premium due at the end of the year, right? So I don't want to amortize that first year's insurance over 3 years and then have to pay another full insurance premium at the end of year 1. That wouldn't make any sense. Okay. So everybody, hopefully you got your spreadsheet open right now so you don't forget, so I don't have to mark you down to a C- if this shows up. Change that number to 1.
I'm sorry, can you repeat
That
that?
amortization period in yours, please change that to 1 and then go up and hit your save button so it's locked in there. After you've changed all those income tax effective tax rates to 0.
Where do you go to change the password thing?
Review, unprotect sheet. Any questions about that? There are a couple little things that are a little quirky with this system. That, yeah.
What is the password?
1, 2, 3, 4. Yeah. And that's always on that first page. The directions, if you forget, if I'm not around and you forget, it's always on that first page. Any other questions about those things? Okay, think about your business, think about how it's going to operate, so when you do your accounts receivable, accounts payable, and those types of things, it's something that I would, if you don't change this, and you're a cash business, and it comes through, I'm going to send you an email back, or I'm going to put feedback in there that says, you're not going to collect your stuff in, 60 days. You're going to get paid right up front. Right? You got to go back and change that. So please be thinking about that and making those changes. This one's kind of easy to skip over because it's not something we give a lot of thought to. Okay? This will affect your cash flow quite a bit. All right? Because if you're not collecting things until 60 days out, it's affecting your cash flow substantially, which this program does a beautiful job of fitting that stuff into the cash flow for you. It kind of takes care of it. Okay? But I want you to make sure that it's accurate as to the type of business that you're going to be doing. Other questions? Comments? I'm done for talking for the day. I'm getting quicker.